ASML stock reported quarterly financial results that sent the stock price down. Investors are now curious if they should buy ASML stock on the dip. I'll answer that question in this video. Of course, I made a preview video about these upcoming earnings results, and my guidance to investors was whatever you were deciding to buy in ASML stock and you were curious if you should buy before earnings or after earnings, I told investors that this was a case where you should buy half before earnings and half after earnings. That way, you split up your risks on both sides. You reduce the risk to the downside and you reduce the risk to the upside by splitting your purchase in two. This is the scenario now where if you followed that strategy, you can now buy ASML stock after the earnings results with your second half of your allocation at the lower valuation. But is the stock still a buy following what the management team said? And of course, you've probably already heard the famous comment from the earnings call transcript when the management team said that we cannot guarantee that we're going to grow our revenue next year. I think I've seen that in nearly every publication quoting that sentence from the company's earnings call transcript. So I'll share that with you and I'll provide more context surrounding that because the major proportion of the people that are following this company that you're reading about and watching on YouTube are just reading the headlines. They're not doing the deep analysis that I'm doing on these companies, reading the entire earnings call transcript so that you can get the context surrounding that one sentence and not make a big deal out of just one sentence. If you read the entire conference call transcript, which I have, I'll share with you what that means in terms of the overall picture going forward.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So since this is playing such a big role in ASML stock investors' mind, I wanted to start off right with this comment, right? So the management team saying that some customers are navigating specific challenges that might affect the timing of their capital expenditure. Against this backdrop, while we are still praying for growth in, and this should say 2026, we cannot confirm it at this stage. So, looking at it in context, reading the sentence before really informs this second part of the statement where the management team says that we cannot guarantee growth for 2026. Customers are navigating specific challenges that might affect the timing of their capital expenditures. And that's the big takeaway here that I don't see reported in many of the media outlets that I've read about the earnings release and other YouTubers that have talked about this company. The timing, the timing is the critical factor here. Yes, 2026 might not be a growth year for ASML, but it's just a matter of timing. Those purchases, if they're not made in 2026, I shouldn't say purchases because these purchases have already been made for ASML. The company has a massive backlog of tens of billions of dollars in orders that it's building and fulfilling those orders. So 2026, if revenue does not grow for the company, it's because the companies that purchased those products or ordered those products from ASML will call ASML and say, can we push those deliveries back? So instead of giving us those machines in 2026, can you give it to us in 2027 instead, or maybe 2028? So it's going to be, in my opinion, a timing issue because further in this conference call, the company reiterated their target for how much revenue they expect to generate by the year 2030. So by the year 2030, they still expect to be at the same level, but the timing of the growth might fluctuate as a result of these macroeconomic and geopolitical headwinds. as a result, of course, of President Donald Trump's tariffs, which are throwing the world's supply chain into turmoil and causing and creating a lot of uncertainty and chaos as businesses try to figure out what's going on and the new operating environment. And they're still trying to learn what's going on. And I think even the president is trying to figure out what's going on because one week you have a certain tariff rate, the next week you have another tariff rate. Then they're paused, then they're back on again, and then it's changed, and then it's higher, and then it's lower, and then it's this, and then it's that. So I think the big takeaway so far is that tariffs are going to be higher, meaningfully higher, but precisely what the number is, I don't think very many businesses know. I don't think the president knows at this point what the tariff rates will ultimately end up at. And so all of that uncertainty means businesses are trying to delay making big decisions. They're pushing them out and saying, well, let's wait till we get more information and then we can make a decision. We don't know what our decision is going to be because we don't know what the policy is going to be. The policy keeps changing, so we can't make a decision when the policy keeps changing. It's not that we're canceling, it's not that we're buying more, we're just waiting because we don't have the information to make a decision. And so we're trying to push them out. And that's what ASML is saying here is the companies that are buying their products, which those companies are Intel, Micron, Taiwan Semiconductor, Samsung, etc. Very large businesses, and ASML doesn't have very many customers. And so it has a strong relationship with those customers, and they're always talking and in communication with those customers, jointly creating plans to supply them with these cutting edge technologies that arguably no one else can provide those companies. That's how strong ASML's competitive advantage is. So, longer term, if you look at the chart of the company's returns on investor capital, you can see an increasing rate here at 24.3%, up from 15.4%. So they are increasing one of the most important metrics I consider when making an investment decision. And this chart, by the way, is provided by Fiscal AI. There's a link in the description for their services. Additionally, when I look at the company's forward price to earnings following the price decrease, it's now trading at a forward PE of 28. And then when I look at and I updated my proprietary discounted cash flow valuation model, the intrinsic value per share I calculated for ASML is $687. The current market price is $745. Given that I apply a margin of safety on my proprietary valuation model, I would say ASML stock is fairly valued on valuation, whether I look at my proprietary DCF or whether I look at the forward PE multiple. So to answer the question, do I think ASML stock is a buy on this dip here? I think so. I think this is a good buying opportunity for long-term investors. I think the risks from that statement about growth in 2026 were overblown and taken out of context because I don't think the people that were reporting on this company, I don't think they've been following it very closely. I don't think they've been reading the conference call. I don't think they read the entire conference call transcript. I think they just took that statement out of context, taking AI to summarize the earnings call transcript maybe instead of actually reading the document and understanding the latest developments at the company. So after I did that, I felt more comfortable about this business. And as I usually say, getting a great company at a fair value is an excellent deal for long-term investors. And that's the situation I find ASML stock in right now. I think it's one of the Hall of Fame businesses, and I think it's trading at a fair valuation. And so I think it's a great deal for long-term investors. So I reiterated my buy rating on ASML stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.